In this video, I'll show you how to complete your USA crypto tax guide with Koinly. First, here's the basic rule. In the United States, the IRS treats crypto as property, not currency. That means selling crypto for dollars, swapping one coin for another, or spending crypto can create a capital gain or loss. On the other hand, rewards like staking, mining, or crypto received as payment are generally treated as taxable income. The IRS also says you must answer the digital asset question on your federal tax return. To handle this in Koinly, start by adding every wallet, exchange, and blockchain address you use. Import your transactions through API or CSV so Koinly can calculate gains, income, and transfers across your accounts. Koinly also offers U.S. tax outputs including Form 8949 and Schedule D, which are commonly used for crypto reporting. One very important update for US users is cost basis tracking. Koinly says that starting January 1st, 2025, the IRS requires wallet-based cost tracking for crypto, so US users should make sure that migration is active in their Koinly account before filing for the 2025 tax year. After importing everything, review your transactions carefully. Check for missing history, duplicates, wrong labels, and unmatched transfers. Then open the tax reports section, choose your tax year, and download the report you need for filing or for your accountant. Hope the tutorial was helpful. Subscribe to my channel and see you in the next video.